So wait for the people coming. All right, so there's one viewer. Okay, that's fine. But get on, if you guys are on, get on voice chat so that we can talk in the Discord group. So today I'm just really going to talk about what we should be talking about, get me on track on bonds. So I'm pulling up my working bond report I did this month, which I have really been lazy. Okay, so I want to bring up so companies right now are heavy in debt. They've been in debt for a while, since 2008, and they've been building it up, their debt positions up. So debt is cheap. That has allowed the S&P 500 to grow at rates to really rates that seem unsustainable. And so if we look at the Schiller index, so this is what I'm talking about, PE Schiller ratio, PE. So we're in the Schillers, and really what we are, and we're approaching, so the Schiller index says that anywhere below 25% is cheap. So debt's really cheap right here, or like between 25 and 25%. It's medium. So we're above that. Right now we're at the Black Tuesday levels, and we're going to be increasing our debt, our PE ratio of all the companies in S&P 500 and what their profit to earnings are. So like, let's say like Apple's trading at whatever price it is at. If you look at their sales overall, they have stayed the same for many years. They have not created any new innovative products that entice people to buy. So what that means is that there's really, the market has been overvalued, and it's going to continue to stay overvalued for a very long time until the next crash. And just looking at this, and then also trying to tie it to 10-year treasuries. Okay, when we had let's start from the 80s, or like right here. So we see this, we see that the rates have been going up to 16%. In the 80s, it paid a lot to be a saver. Now it does not, because we are at the lowest it has ever been in terms of the rate, the 10-year treasury yield. So it's not, so at the same time, we have been going up since the 80s. If we look at the 80s to now, so the 1980s, okay, this was the rate, okay, compared to the Schiller ratio, so we're not overvalued. If we look at the S&P 500 prices, this is how you kind of like tie it up. So we were progressing very slowly in the S&P 500, and ever since the 1980s, when we can been going up at the same time the 10-year has been going down. But what really capitulated the S&P 500 to go higher was when we got off the gold standard in the 1960s. There are some economists who were on that, who said that they thought that was temporary, but now it's permanent. So we are out of permanent fiat currency. So because a lot of currencies are pegged to the dollar, they're not, our dollar's not backed by anything but our debt. We used to be backed by the gold standard, which was the case in the Brentwood symposium or conference, whatever, after World War II, when everyone's economy was total shit and they had to rebuild the economy. So what the Brentwood conference did, so we can look that up, Brentwood. So the Brentwood conference said, okay, so this is what the Keynesians were doing. They pretty much said, we're going to make the dollar the universal currency because it's backed by a dollar. And that helped us establish as a world power. But since we're off that, gold, people don't think gold is money anymore. Gold is still money. It's its own thing, and it's finite. So there's not a lot, and supply is always a problem because you have to dig gold out of the ground and refine it. So just knowing that, this kind of opens up to opportunities to invest in other alternative assets. And just knowing that, if interest rates are this low, and people are thinking, okay, there was an article out I read earlier this morning saying, like, people expect the interest rates to go up in 2021. And I'm saying the opposite, because there's no way that the interest rates will be going up for the 10-year yield. The reason why I bring that up, because you have to look at the Shiller ratio, the Shiller PE ratio. This thing's going to continue going up. Everything is going to continue going overvalued. So their earnings are staying the same, but they're taking a lot of debt. There's not a lot of things they can do about it. They will issue more debt. They'll issue more bonds. And bond hunters are going to be hunting for the yield that they're looking for. This is why, like, you're hearing President Trump getting mad at investors buying Chinese bonds, because China is the only country right now where their bond yield is above 1%. They did not take the route of every country that they did, taking their interest rates to negative, forcing savers, okay? These savers cannot save at all. If they even have a checking account, they're probably not doing much other than they're taking that money out. So when they take money out, okay, that's deflationary, and that means banks don't have that much money. But they're also forced to work with a bank. So most of these people who in these negative rate countries, they pretty much use their cash as paperweight or something. Take Venezuela, for example. It took forever for the government to help the people, and they have a currency crisis. Okay, this is not something you will make up. So if you look at Venezuela currency crisis, their currency has gone to hyperinflation. So everything that they print is useless compared to the dollar or other major currencies. So that's what I want to bring up, and just talk about, because I do these once in a while and I just want to mention this. So if you look, stocks at all-time highs, housing's all-time highs, corporate yield, mortgages, Fed fund rates. So there's going to be zero over time. So assets held by the Federal Reserve. Okay, the Federal Reserve will always be there to backstop the economy at the price of your taxes. Nothing's free in the world, and they will tax the shit out of you later on in the future. Inflation is a tax, okay? And it will really, really kickstart a conversation that all these companies will eventually have to, these countries basically, they have to do something about it. So if you read the report, and I'm going to, all these pretty graphs are from Hedgepedia, and I encourage you guys to click on the link and read about it. So, while you guys, everyone's buying, the retail sector's buying companies, these companies are also not really doing any buybacks right now. But foreign investors are taking up the cape and really buying up the U.S. economy. They're bullish on the U.S. economy, even though our economy is in free fall. There's not much money velocity being moved around. So I just want to bring that up. So if you guys are not in voice chat, I encourage you to get on voice chat, because I'm pretty much going to be talking until we kind of end. So this is the marginal debt I was talking about. Foreign purchases, foreigners are buying this. So they're buying our debt, we ship our debt out. So another part that, I encourage you to look at is the Great Reset. You hear a lot from me, when I talk about the Great Reset and how you protect yourself, and so you want to be outside the banking system. So you want to be in crypto, gold and silver, those assets themselves. You want to be in them, because when these things happen, when we reset the currency, okay, we have reset the currency in the history. So in 1920, we did have a reset. Okay, that formed the Federal Reserve. And in Venezuela, for example, most recent one, they had reset their currency. Now they're using a dollar or something as their currency. Ecuador, they had a problem too with hyperinflation, so they had to reset their currency. China, no one talks about this, but we did have a reset in the 1960s in the Cultural Revolution. The Cultural Revolution had an enormous effect. It put a lot of people in the upper class, rich people, into the poorer class, so everyone was poor. So in that case, we need to understand this might be happening. So
you have a sorry, hey, how's it going?
Hey.
Do you have a timetable, you think, for the Great Reset? I hear it thrown around a lot now, but I never really hear anybody say when they think it might happen.
No, so they're taking advantage of the pandemic now to propose that, but when they implement it, it takes another crisis, and it's the insolvency crisis of these companies. Okay, everyone in the entire nation, we have trillions of dollars in debt. So that is the Federal Reserve, they use this crisis to make themselves the lender and buyer of last resort. And what that means is that they pretty much own everyone's debt, including for your student loans, your mortgages, your bank loans, okay, your anything related to loans, the local city municipality loans, bonds. They own every single bond. Okay, even they have bonds from other countries on their balance sheet that you are allowed to see. The Federal Reserve has two balance sheets: the one you can see, and another one you cannot see. The one that you cannot see, I mean, that one, no one knows how much is it, and then you can only estimate how much. Like, you can just guesstimate. It's like, okay, maybe it's in the 30 trillions what they're allowed to see. Even though there's like 7 trillion, the one that you're allowed to see, we don't know the second balance sheet, what it has, because they're not going to tell us. And because
That sounds super sus.
yeah, that's why you don't trust the government. They took this long to get you the stimulus check because the Federal Reserve has to approve that, because that's issuing more bonds. That's 4/4 of them buying bonds. So, 4/4, they're going to be pumping out trillions, and they're more than glad to pump out trillions, because at the end of the day, they control all the debt in America.
So during like a great reset, since they control all the debt, that would actually come down to just like they would be able to own the underlying assets of the debt, right?
Yeah, basically, you will have the merger of the Federal Reserve and the Treasury, because both the Treasury and the Federal Reserve are separate entities. But when they merge, that is really bad for America, because that means taxes will spike. Because we are insolvent. Uncle Sam is insolvent. All these companies right now are zombie companies that shouldn't be, traded on the NASDAQ or whatever. I mean, these are the stuff you can't make up, because all these companies, like, let's say, I can pick one off right here. Aerocomitral. I mean, their balance sheet looks good, but the underlining is that the pandemic made almost every company in the entire world take on more debt to stay solvent. But in the end, some of these companies, these bad actors, they abuse the system so much that at one point you will see, if there's another crisis coming, they will not survive. If there's another pandemic or something, or another black swan, they won't survive. This will take the investors' money. It's gone. I mean, there's no way they will survive. Or like the Fed buys their debt. I mean, that has happened to Apple, Avivai, Microsoft, Google, and they're still buying. So in this case, they have all these loan programs, but none of them are being used. And that's something that in the future we'll see more of. So retailers are net short. Okay, speculators are net short the long bond, which is the 30-year bond. So the 30-year bond is being shorted because they think, like, okay, I mean, it's only gonna go down from here because they're not gonna take it all the way to negative. But if you look at the primary dealers, the banks and the hedge funds, you can think about those. They're actually buying the bonds, so it's natural for hedge funds to be on the opposite side of speculators. But when they are net long, That to me tells me that they're not sure what's going on. And the primary dealers are having a issue right now because we're shipping all these bonds and that they need from the Treasury. Okay, the Treasury sells these bonds to the primary dealers. And so that's on their balance sheet. So the balance sheet of the banks right now, they're trying to get these. They're trying to get them, but they're really hard to get them because there's not a lot. Because you have to think about the other side of things. The world themselves are shitting themselves buying these low yield bonds, and they're buying it because they don't have collateral. T-bills are pristine collaterals, and that's something that people want because you can trade them for money, basically, because most of the banks in the United States keep their money with the Federal Reserve. So when we had that repo crisis last year and that kick-started the Fed to cut interest rates, that was the sign that there was trouble already in the market, that there was a crash coming in. Anytime you see trouble in the overnight repo market, so if you weren't trading at that time, the interest rates just spiked out of nowhere. That created panic in the repo market, and the Fed just bailed them out. And so what happened after that, they continued cutting rates in there. So even though they said this, the media is lying to you that the pandemic was the cause of the crash. It was not. It was the banks having trouble with the loans already.
So, in a situation like the Great Reset, there's no even short side to play it. The short side would be to get into assets, right?
Yeah. You need hard assets because then they reset the currency to dollars worthless.
You couldn't even have a short side to it.
Yeah, but it's more like,
I mean, the whole world would pretty much change if this happened.
Yeah, if you read my article, the fall of the Roman Empire, which contributed to when they reset the currency, where they put more other things into their currency. It used to be 90% silver, okay? And then, they keep diluting the silver content so it's more like it tamed bronze. And so no one wanted that, and no one trusted the currency anymore. That's what happening into the US dollar. People are forced to use the dollar.
They don't trust the underlying
asset, which is backed by our debt. So the more debt we have, the more that we take it on as taxpayers, but we still can't pay it off because it's trillions of dollars, and it
will never be able to pay it off.
Yeah, basically, because our economy itself, it's become like Japan. Like Japan bought everything. They bought all their bonds. There is no volatility in bonds. No one even trades Japan's bonds anymore, because their bonds are negative interest yielding, so no one wants them. So what Japan did is that they pretty much bought the market. They hold shares of their companies on the balance sheet, the Bank of Japan. So in that sense, it's really hard to find any type of volatility in the Japanese stock market and the bond market, because they're dependent on the stock market going up. Like our Federal Reserve wants the stock market to keep going up because we have to inflate that bubble, which is always leaking at any time. So, the effects of this, what we're doing right now with letting inflation run hot, that's their policy this year. is that they're trying to, the basic materials, like what you see, what you, in basic industry supplies, like silver, copper, palladium, zinc, aluminum. They're trying, lumber, for example, all these commodities, they said, we don't care. Just let it run hot. Because the low interest rates, okay, people are using today's money, okay, they're scared of the money that they have to pay down the road. So, this is also affecting home prices, okay? So I put a picture of George. I love George. And I put this in the channel as well. People that you should watch to understand what I'm talking about is that, in the month of December, there's usually a cycle where it just dies down, and then we have...
Oh, I've seen this guy.
Yeah.
Yeah, he's great. Oh, I watched your video. Now that I realize you posted it one time in the Discord, I remember I watched the whole thing about the Great Reset from this guy.
Yeah.
Ah, that makes sense now. That was you that posted it. I didn't even realize that it was you that posted it.
Yeah, I post a lot of things about trying to help people understand that you really need to really be concerned with this, because when you grow up poor, do you want to get poorer? Because, like, my family, we didn't have that much money, but inflation has been a real pain in the butt because we can't catch up. And so it takes about a whole family. What used to take, okay, imagine this. In the 90s, it only took one income to feed a family of whatever, okay? One person income. And then as time progressed, it took two. Now
2% income, yeah.
Now, if we think about it, if they're going to let inflation rampant, we might as well bring back child labor. Because there's no
you
way,
need the whole family.
There's no way we can support what we're doing right now. It's going to take, probably going to legalize child labor under 14. Because there's fucking no way we can beat inflation. And that's what I want to bring a point to, is like, there's no way. Because we can't support whatever the Fed's doing. Because we're just going to get poorer every year if we don't protect ourselves. Like, it takes, for my family, it takes like 3 people.
3 people?
To support everyone. And it used to just take one. And we were able to survive that. But now it's like, how we have to get creative with 3 people too. And even if at some point my mother may have to go find a job again, because we can't beat inflation where I live, because California has all these laws that are stupid.
Yeah, I can't even. I'm in California too. I'm in Los Angeles, so I see it. I mean,
yeah, and I live in LA.
Yeah, I live. I don't know if you know the town, but it's El Sereno, so it's near Highland Park.
Oh, I know where that is. I live near there. My friend used to live there.
Yeah, the house prices over here make absolutely no sense. Like,
right, so it's I have to prove a point. Like,
yeah,
the housing market in California has turned into a nightmare.
Yeah, it's ridiculous. It literally makes no sense.
Pushed first-time home buyers out of the market. Banks are tightening lending standards, and I want to prove a point where I'm just bringing up the Federal Reserve. I think I posted that one time with Steve. So the Federal Reserve, assets and liabilities of commercial banks. So I'll give this link to you in the Discord. So this is like how I keep track of, like, okay, what's going on if they have done anything. So we look at this bank credit. Okay, it was staying the same for a whole entire month. So November when we started to uptick a little bit. But if we look at the mortgage rate securities, it's been flat. Real estate loans, and we look at the real estate loans, it's pretty flat. No, so what that means is that they're not lending. Okay, consumer loans, not that much. It's been flat. So banks are tightening lending standards because they're not willing to lend to anyone right now, and it's really hard to get a loan for you're a first-time home buyer. So people are getting fucked. But the depositors, so when you deposit money, that's a liability on the bank side. So they have been going up. Okay, because people are expecting harder times ahead. So the money velocity has not moved. There has been no money moved around. Even though the Fed is printing money, no one has been spending money. And you look at the credit cards, credit cards right now, if you expect like last year, it's going up, it has not been going up because people are paying down the credit cards. So I learned to look at this from Steve, and then I say, okay, people say inflation's coming and the inflation theory is here and everything's all happy, and you look at the bank data, okay, nothing has changed. We're really in the spot where we're not growing, and we haven't grown our economy for a really long time.
So do you think this is why, I don't mean to even make it political at all, but I know conservatives don't want to pass more stimulus. Do you think that this is what they're taking into account? Or
right, so people who are there, they want that $2,000. That's just going to go on the deposit side, which is the liability of the banks. It is just going to be sitting there and being used to pay off their debt. They want you to go out and spend money, but it's just going to be sitting there. So that's why I wanted to be today. I gotta catch up with whole bonds literature because I'm behind. So I made it today. I was like, okay, I'm just gonna spend at least an hour talking about it.
Yeah, about bonds.
It's not political. The more you know the inner workings or the basics or fundamentals around the bonds, the more you know, okay, this doesn't feel right. Because with Yellen coming back, okay, the Yellenator, I need to find that video. Danielle DeBoof is an economist. Janet Yellen is a labor economist, so she wants this. In the 2008 financial crisis, she did not see this coming, that the banks will do this, make subprime loans and stuff.
Yeah.
And she just said, I didn't see it. When Congress asked her, did you see this coming? Were you warned? Maybe there are a lot of warnings coming in. And she said no.
She said no.
And as a Treasury official, because she was under some guy, if you say no, you didn't see this coming, that's a big red flag that you're not qualified for the job. she wants this thing to pass because she's a labor economist. She wants MNT. MNT, if you don't know what that means, is like universal basic income or something like that.
She wants that.
But
Really?
yeah.
Huh.
So that's substitute for people's wages.
Yeah.
But that doesn't incentivize to people who start businesses to grow their wealth. So
I mean, that's just socialism at that point.
Yeah. So that's where we're heading towards to. We're socialists. We don't have a free capital market right now. MNT just doesn't send people to be independent of the government. It proves that we are more reliant on the government to do everything for us. So that goes back to the saying, like the Great Recess. In George's video, he says, "You own nothing, and you'll be happy."
Yeah, I remember that.
And that, to me, that is unacceptable. That means I own nothing. That means I'm paying someone to be happy.
Mm-hmm.
That means someone owns the thing I want. And I will never own it. And that means he's going to get richer while I get poorer. Okay, so interesting subject, but
yeah, I mean, it's I had been hearing about this because I was big in crypto in 2018, like before in the November of 2018.
Yeah, I was not involved in the crypto space until this year. I regret that, but now I understand it more, and now I'm like thinking I should have been educated on this because no one will teach you this at all. In school.
Yeah, they're not going to.
Because they want you to be brainwashed and part of the system. They're never going to teach you this. Until you break out and you start understanding, like, why are your lives so miserable? And all these people, like doctors right now, people in grad school, they're heavy in debt. And one of my friends, it was $400,000 in student loan debts.
Oh my gosh!
And I don't know how she's gonna pay that off. Just because she went to grad school to become a doctor.
That's probably never gonna get paid off.
And
it's like,
yeah.
So sad. Yeah, I mean that's partially the reason why I would tell people, like, if you're gonna go to school, great, but don't take a loan because you're just stuck. Even if you did want to buy a house after you get your student loans, that affects you qualifying for your home. Like, there's even a less likelihood that you'll get a house because you went to go get this big degree.
I don't know. Anyways.
So that's sad.
So,
yeah.
You want to look at something really interesting. Okay. Since 2010, our earnings have been going up, but we dipped in earnings of all the S&P 500 companies.
We dipped in earnings?
Yeah, so that's interesting data. That's saying earnings has gone down. So, like, when they say, like, oh, we did good on earnings this year, they actually did horrible. And it makes no sense. The market's, like, up on these companies. Because savers can't save anymore. They're pushing everyone to this market to find whatever they need. They need extra cash. Yeah, so that's what's happening right now. That's why I'm always careful and being mindful of the market, even though the market is overvalued and it will stay overvalued for some time. But it just looks ridiculous, though, if you look at the data.
I mean, I didn't start trading till what, like 2 months ago. And I think the first thing that stood out to me was how a lot of these companies. I guess I'm kind of traditional. Like my family, um, grandpa started a business and passed that down to my father. Um, so their business is manufacturing. They manufacture like trash beds for trash trucks,
Mm-hmm.
and it's extremely difficult. I mean, they've had to pull money out of the house and stuff like that just to keep the business alive. When I started trading, I started realizing that a lot of these companies aren't even relying on purchase power in order to grow their value. Like it's not because there's a lot of people out there buying whatever product they have. And I know it just sounds super simple the way that I thought about it, but I just realized that it's literally what just like people swapping hands, the money swapping hands, and saying that there's value on something, but there really isn't. It's it's pretty eye opening, or it was pretty eye opening for me because I was I didn't know that it was so overvalued until I started trading. I was looking at these companies that everybody's hyped up on, and I was like, I can't believe that company is worth $10 billion. Like
Yeah,
$10 billion is a
there's
ridiculous.
they yeah, it's like that right now. They're perceiving the value 10 years down the line on this shiny white horse like Neo. I fucking hate Neo.
Tesla.
Yeah, and the product, like Tesla, they're saying, oh, it's not a car company. But you look at the underlying um, product, it's still a
Yeah, it's
car
a
company.
car.
It's a car.
Yeah, it's a car.
It's a car. Even though they have chargers, I mean, it just comes
Mhm.
with it. But
And on top of that, it's not even a fully functional business yet. They still have issues when it comes to just getting their cars to be bought. I
they're
mean,
basically they're saying everyone with their share price value, they're saying everyone owns a Tesla,
yeah, like literally everybody in the world owns a Tesla.
including the small.
Everybody in the United States.
Yeah,
Yeah,
it's
yeah,
just
no,
not cheap.
I completely agree because I even try to start like my own business, and I learned a lot from that when it came to just like what to expect out of a business and what to like. When I look at a company, I almost think very simply like, what are they doing? What are they selling? Like, if they're not selling much, they shouldn't be worth that much. But so many companies now that literally just pop up out of nowhere and have like the smallest product, or like the product that you don't even think that you would ever need in your life, but they have this insane valuation. Like it really, I don't understand it, and I just stopped trying to understand it. If I'm being honest.
See, when I started trading, I had that mindset too,
Uh,
and it just fucked me over because nothing
yeah,
made sense.
yeah, yeah. So I just stopped. I just stopped trying to think that way, and I was like, okay, well, I'm just gonna pay attention to trading and just not even think about it as like, is this company good or not? I'm just gonna look at a chart and see whether or not I want to play it
Yeah.
because there's no rules when it comes to that. It's really weird. It's really weird.
So like interesting enough, when the Federal Reserve bought all these corporate bonds, it also bought these overvalued companies too. So they may have Tesla on their balance sheet.
Really?
Yeah. So maybe
The
Fed are backstopping Tesla from going bankrupt now. And now, since Tesla's part of the S&P 500, the Federal Reserve may be buying their debt. Because Tesla owes a lot of money. Because taking a car is really expensive. And you have to find people buying it. How many people are buying these cars? And like Elon saying he wants 500K cars being sold next year. Or something like that. How many people are in the market to look for a new car? If we look on the balance sheet of the loans of credit, our car loans. Let me see. Automobile loans. They have been stagnant. They haven't even moved that much since now. Like, you take all this data right here. No one is taking a loan to buy a car.
Yeah.
So it all comes down, bonds have so much information you can learn from them, but at the same time, it's more of the traditional mindset of making sense of things that don't make sense. So like, I need that in my life to make sense of something before I buy something, and that's why I make contrarian choices and really conservative choices when I'm trading, because I want to know what I'm trading and I want to know like the thesis behind it. Does it make sense? Right now, everything does not make any sense because the Federal Reserve have backstopped the whole credit market. They pretty much own the whole credit market already. There, like I heard from someone that his friend, his student loan got bought by the Fed. So now the Fed owns his loan.
Really?
Yeah. His student loan. I was like, really? I'm not surprised.
Just buying up everything.
Right. So, 1/3 of everyone's mortgage in the United States, the Fed owns it because they own the mortgage-backed securities. They have been increasing their mortgage-backed security buys this week. Last week they bought this much. So, that's on the bank's balance sheets. But if we look at the Fed, it's actually atrocious.
I didn't know that the Fed, when they bought bonds, they could also buy shares of companies. I didn't know that. I didn't know that they acted that way.
So when the Federal Reserve buys a bond, it acts as they're buying the assets of the company. They're buying the company, driving the company stock price higher. And that's illegal. But they did it anyways. Because under the Federal Reserve Act, they have to separate private from public.
Huh. So crazy.
I gotta find that list of companies. I'll share it. Because
yeah,
I thought that was crazy that they will do that. And they're not gonna stop. They may...
it's funny?
Yeah.
No, I just remember... I don't know if you were ever into politics or anything like that, but I remember back in 2012, Ron Paul, he was a father for Rand Paul, the Kentucky senator.
Yeah.
He was talking about like a crisis, kind of like what you're talking about back then. This is like 8 years ago, and I remember that's the reason why I bought crypto, was because he said because of what he said about the Fed and how they are pretty much just managing all of our assets for us without us really even being aware of it. Really just owning our assets for us, and we have nothing, like we can't do anything about it. remember that back in 2012,
I wish I
but it
bought
just seemed,
crypto. I heard about crypto. I was still in college. I heard a little bit about crypto. I didn't understand it. There was no guides explaining crypto 2012.
mm,
In 2014, I had money for a little bit of crypto, buying Bitcoin, like whatever price it was at. But
yeah, yeah,
still,
yeah.
there was like no understanding. Like if I understood the potential of what I did about central banking now, and when I was like young and just finished,
Huh.
I was still on the verge of finishing college, I would have bought at
Well,
least.
yeah, I would.
I
I would
would
have bought
have,
a lot more.
yeah, I would have bought at least $2,000 worth of crypto.
Yeah, easily,
Like the only one you
easily.
had was Ether. I think it was Ether and Bitcoin at that time. But
It
it
was
was,
Ethereum.
yeah.
Mm,
But it is what it is. Like we don't know when the bubble will burst. But when it bursts, we'll know when it bursts. That's why I'm saying the banks have control of crashing this market, and they can dictate when they want the pullback to happen. We'll just be strung along on their schemes till then.
yeah, it sucks. It really does suck.
And there's nothing you
Like,
can't do about it because you are a tiny guy. Like, all the
yeah.
Republicans, all the
Mm,
politicians, they all got their bonuses for passing this bill. The CEOs got all their
yeah.
bonuses with all these bills being passed to help them.
Oh,
Um, the politicians themselves, you don't trust the politicians. They are all bought out by the corporos,
mm,
and you own nothing. You don't get a say. Like I was watching this lady emailing her representative and calling her and petitioning her, and she get not a response. And I was like, girl, you don't do that. You don't have money. You probably have to pay her $1 million just to get her to listen to you, just to have her
mm,
ear.
yeah.
So all the politicians in
Yeah.
this country are bought out.
Yeah.
They don't
I
work for
don't.
you. Sorry.
Yeah, you can't, you can't trust them. But I think what sucks is when I talk to, I don't know, normal people, I guess is the best way to describe it. And they're so for getting more money when it comes from the stimulus. It's like, it's pretty terrifying just because I know that there's so many people who are just, I mean, at this point, they're reliant on the government. There's no other way to put it. They can't work. You can't go work. You literally have to get your money from the government, which is, I mean, I like capitalism personally, but it's just weird to hear a lot of people now almost accepting the fact that it's not going to be capitalism anymore. They're kind of okay with not, you know, working for whatever reasons, if it's fear because of the virus or, you know what I mean? It's just,
Right.
it's almost going to be like way
You
too
know,
easy for them to
it's
just,
funny because my family escaped communism to capitalism.
mm,
And that's why I was
yeah, I
talking
mean,
about China because the Mao Zedong made my mom poor. She was in the wealthy
mm,
class.
really.
Yeah, Mao
And she went,
Zedong.
and then she became poor.
Mm-hmm.
Everybody becomes poor. There's nobody that like really wins, except for the people that are in the power.
Yeah.
Except for the people like, yeah, except for the people that cause it. People that cause it win, but the people that are just on the sides don't. It's pretty ridiculous, honestly. Conversations like this make me so like, like I hate that it's going that way, and there's like really nothing you could do. Literally nothing you could do.
I mean, yeah, I can't do anything, but if I'm outside the system, that's something I want to be. I want to be outside the banking system. That's why I buy a little bit of silver from time to time because that's what I can afford. I don't buy gold. I wish I could buy gold, but it's like really expensive for 1 ounce of gold. But I mean, it just takes. If I had the choice, I would sell my silver to exchange for gold because it's about the same price.
Yeah.
But it's just. But that's like I had to get $2,000 worth of silver for 1 ounce of gold, just to save money. But it's still money, but you can't break it down.
Yeah.
So silver is much easier to break down.
Oh, I see.
So I remember my friend from college and his brother hoarded gold and silver. At that time, I didn't realize, like, okay, I had that mindset where they brainwash you saying gold is worthless. But now I think about it, he's pretty smart because he bought gold at the lows and he was really on spot because gold in 2009 levels. So let's go to gold prices. Gold futures. So we look. Okay, so in 2007 levels, the Great Financial Crisis level, he bought gold when it was 1800. He bought a shit ton of gold when he heard about they were gonna cut interest rates, so he just put his money into gold. I wish. Oh, it's a lot of things you can't do when you're poor.
Yeah. Yeah. Oh, I understand that. I mean, my family, I would say now, do like a lot of hard work is more middle class.
Right.
I mean,
the middle class is gone already. It's like getting decimated.
Yeah, I mean, my dad thankfully is able to go to work, or and he still has a job during this pandemic. But I don't know what would happen to my parents if he couldn't. I mean, if he couldn't work, that'd kind of be it. It wouldn't. He couldn't even rebound somewhere because everything is so expensive. You couldn't really find anywhere to put your feet down.
No.
And I mean, he's a big saver too. Like, so he just saves.
My dad's a big saver, but he's getting beat by inflation. I want to help him invest his money, but at the same time, he says I don't trust the stock market at all.
Yeah, I mean that's the same thing with my mom's a little more. She's a little more into putting her money into the stock market. My dad's very traditional. He just likes to save his money, and that's it.
And he's not. He's getting beat because.
Yeah, that's what I hate seeing is because he works so hard. That I hate seeing the fact that he works as hard as he does and can't really get the full benefit because of the where the economy is at, and because of how inflation is affecting it, how everything's just getting more expensive, and it's not like he's not moving anywhere in the from middle class to a higher class. He's just kind of staying middle class, maybe fluctuating lower, but it's like it sucks because there's people out there that are doing way less, making way more. It doesn't make sense. Like there's no effort, there's no equivalency in the effort, and it's kind of just set up that way.
Right.
So it is hard for the old to convince them. I don't know. My parents, I guess, are in an older generation to let their money work for them. when they're just so used to you just work and you save. Like the
That
economy isn't
yeah,
like
that
yeah.
used to be the way, but it's not that way anymore because our debt needs to be serviced because when I remember Bill Clinton in power when I was 5, and he fixed the whole economy. Everyone was happy.
Mm.
And Bush came along, and we had a crisis, and we had to take out a loan, and that really kick-started the whole debt thing.
Yeah.
Because we went to war, and we had to fund that war. And time go on, had more crisis after crisis.
Yeah, and then the mortgage loan crisis hit.
Yeah.
Yeah. I just hope that there's enough time from now till like the Great Reset to like at least prepare for that happening.
I'm
You know what I
pretty
mean?
much trying to prepare too. Like, I just need time to prepare. Like, I don't want to
Yeah.
get stuck where, like, my parents or in the Cultural Revolution where my mom's parent went from rich landowners to poor people.
Mm.
Where the government took away their land and money and said declared it as state property.
It's crazy. It's so crazy. I couldn't even imagine experiencing it.
It was
But like,
very traumatic for her parents.
yeah, I bet. I bet. It's like your whole life is just taken. That's it. They just take it from you.
Yeah.
You just take it. It's so sad that I see people embracing, dude, now I hear people quoting Mao publicly. Like he was correct or something.
Who?
Oh, the chairman for the new. I think it was the woman that you're talking about, the one that's for the workers that
Oh,
wants to
Janet
be.
Yellen?
Yeah, she was giving a speech actually, and
Oh no,
in her speech,
I'm gonna send you a video by Daniel DeMar something like that. Danielle. She
huh?
said the opposite of what happened to during her time as Treasury Secretary, not Treasury Secretary, Federal Reserve Chair. She said like this actually happened, and she hates Yellen so much just because of that. All these Keynesian economists fucked up the economy. Like
Yeah,
John Maynard Keynesian, they still teach him in school, saying he is on the correct side of history, whereas what has worked in the past does not work now.
mm,
So this guy fucked up everyone. He said the government should do more. And then his ideas led the central bank, like what the central bank is. We were doing fine before the Federal Reserve came along.
yeah, we were doing fine.
In the 1920s, we had improvement and bust cycles. That's right. Companies were weaker and stronger. I mean, you had competition, real competition. But now it's like we don't even know what all these mega corporations keep getting bigger and bigger.
They're not stopping.
Yeah.
They're not stopping at all.
No. Alright, so yeah, what's in here for today? I just don't want to make it that long, and then I'll post it for everyone.
All right, sounds good. Thanks.
Cool. And then we'll do the next one. So, Ruben and I are altering people. So like, you and Ruben work together, and I'm just gonna be helping the other people since there's only 6 of us now. 6 of you guys. So we're just saying, okay, we're just gonna divide it up, and like we'll rotate every week, so that way like you guys get our help, and I'll still keep lecturing on anything like bonds or market. But my main focus is educating people about the bond market, because no one talks about this. There's not a lot of groups who talk about this, and I
Yeah.
have to make it a sticker point. If you follow me, you have to really understand like the fundamentals, because I know like Ace never talks about it, and I just completely given up just trying to educate people like what their government is doing, the economy itself is doing, and I just said screw it. If anyone I teach from now on, I'll just teach them bonds.
Yeah, it seems like they don't really care too much to get into that type of stuff because it doesn't really affect them right now.
Right. I'm more worried about people's futures in the long run. Like this is why whatever I'm helping my friends and trying to make them realize all these stuff that's happening, and trying like say like you guys have to start protecting yourself from the government, not don't rely on the
I,
government,
yeah,
because the
they
government
probably
can't do
think that
shit
you're
for you.
crazy.
Yeah.
Yeah, they probably think that you're crazy. You know,
Yeah, I get a lot. One of my friends called me, that sounds communist shit. You sound a little bit crazy. I'm like, no.
like
This
that's
is actually
yeah,
going on.
yeah. No, I'm telling you, that lady, she like literally quoted Mao Zedong like in her speech, like
Oh, no,
saying
no,
that
no.
that's one of
You,
her favorite
why would
economists.
you quote Mao Zedong? That guy
Yeah,
killed a lot of people.
yeah. He killed so many people. I mean, I think
He
people
sent my
forget.
dad and my aunt to internment camp when they were children, and they were in
Really.
jail for just saying we don't like your policies, and they had to escape from that camp by swimming the Hong Kong Channel, and that was
What?
not a very easy swim. They struggled. It took my dad 7 tries to swim across the Hong Kong Channel in salt water. I don't know
Oh
how
my
he survives,
gosh,
but he had to escape for his family.
that's crazy.
Yeah, it
So
took me a while
crazy.
to realize that that would have been possible. I don't know how my dad did it though.
Yeah, that's what yeah, when I heard her say that, I was like, dude, like I can't believe you really just quoted Mao like publicly as a good economist.
Mao was
Like,
not a good economist. Mao was a poor guy who wanted to see Russia, and like they said, here, this will work.
mm,
Like that guy didn't even fight about his, but that was a different time. They were fighting the Qing dynasty or something like that, or oh no, they were fighting the Democratic Party of the only time when your voice mattered in China was like they went from a empire to a democratic nation and back to a communist nation.
mm.
Okay, cool. I'm gonna stop here, and
Yeah, that was a good talk. Thanks for all the info. I'm
no,
definitely going to be sharing that stuff with people.
yeah, okay, cool. Thank you.
All right.
Bye.
See you.